And as far as markets are concerned, it's going good for the Indian markets. Nifty is now up nearly 70 points as we speak, near that 25,970 mark. But let's also talk about V2 retail. This one reported very strong set of numbers for the quarter gone by. Revenues have risen by about 86% on a year-on-year basis. That's a very solid growth. Margins, meanwhile, have come in at 12.2% versus 8% that the management and the company reported in the same quarter last year. So very strong set of numbers across the board. But to understand whether the momentum will sustain going forward, we now have Akash Agarwal, whole-time director at V2 Retail, now joining us. Mr. Agarwal, afternoon, and thank you so much for joining us today. Volume saw an uptick of nearly 58% on a year-on-year basis, while same-store growth was also at about 24%. What were the key drivers that led to this kind of volume growth in the second quarter, and will the momentum sustain then?
Yeah, hi, good afternoon. Thank you for having me. So first of all, Durga Puja moved to September this year compared to October of last year. So there was a festival preponement, and that is why we gave a normalized SSSG also. So our normalized SSSG was also healthy, around 10.5%. And we have seen the momentum continue over the last few quarters. And in quarter three also, because of the early onset of winter, we're seeing very, very good footfalls and good uptick in sales.
Okay, and we did interact with you a couple of months ago, and you did tell us that GST benefits only 6 to 7% of your total portfolio. And despite that, you've reported very strong top line growth. What will your target be for the second half of the year? Will the momentum sustain? If you can quantify the top line growth and margin expansion for us.
So we are targeting, like we always guided, for at least a 50% revenue growth. But I think we are beating that, and we will beat that in quarter three and four also. But for the next 2 to 3 years, our guidance is the same, growing at least a 50% revenue growth while maintaining the 8% pre-Ind AS EBITDA margin.
Understood. So that's as far as your growth guidance is concerned, 50% growth guidance, revenue growth. You added about 43 stores in the second quarter. What will the target be by the end of this fiscal? What is the full year target? And what will your CapEx plans be?
So when we started the year, our target was 100 stores. But seeing the kind of response that we got from our newer stores and the kind of momentum that the old stores are, experiencing, we have increased the store opening target from 100 to 130 stores. And next year's target is also increased from 120 stores to about 150 stores. So we will keep increasing our store opening guidance as long as this strong momentum and profitability continues.
Okay, so you've raised your store opening guidance from 120 to 150 for next year and for this year as well. So will the focus be on tier 2 and tier 3 cities? Will it be on rural areas? What will the mix look like as far as new store openings is concerned?
So yeah, most of the new stores will come in tier 2 and tier 3. That's the main area of focus. And that has been our strong core market throughout the history of the company. And that's where the ballooning middle class of India is. So that is our core target.
And Mr. Agarwal, you raised about 400 crores via QIP a few months back. What will the proceeds be used for?
So we paid back a debt of around 135 crores. 150 crores will be used for working capital for newer stores because we increased the store opening guidance. And 100 crores will be used for general corporate purposes.
What is your debt profile looking like currently? How much has it gone down by? And what will the deleveraging plan be going forward? Are you looking to reduce your debt further in the second half?
So we had a debt of about 150 crores and we've paid back 135 crores. And the rest will also, I think, will be debt free by the end of third quarter.
You're saying that you'll be debt free by the end of third quarter. And will this be despite the store addition and capex plans that you have lined up?
Yes, so we have enough cash flows and the QIP will, support the growth, I think, till the end of next year.
Understood. And what about net working capital days? That has risen this quarter to about 45 from 37 earlier. What led to this increase in working capital? And do you aim to normalize this going forward?
So we want to be the best paymasters in the industry. We want to be the best, the best retailer for all our vendors. So we give a bill discounting feature to all our vendors. So actually, this working capital cycle will can go up even more because we've already given almost 200 crores in early payments to our vendors because they're always in need of working capital, and they give us about 1.5 to 2% of bill discounting.
Understood. So that's as far as the revenue mix is concerned, but also wanted your thoughts on average selling price. That too rose by about 17% on a year-on-year basis. If you can take us through where the pricing is headed going forward.
So that's a skewed number because our contribution of apparel has gone up significantly. So apparel's ASP is much larger than general merchandise ASP. If you look at apparel to apparel comparison, the ASP increase is only 3 to 4%. So we do most of our space allocation decisions based on whatever gross profit per square feet that category gives us. So apparel has always been our strength, and it has been giving us a higher per square feet GP consistently. So that is why we are increasing our space in apparel.
Okay, so the outlook continues to remain very positive. You've hiked your net store addition guidance going forward, and you're maintaining that 50% revenue growth guidance for the second half of the year as well. Mr. Agarwal, thank you so much for taking your time out and speaking so candidly with us with respect to your ambitions and your outlook going forward.